Good afternoon, everyone. We'd like to give you a midday market report. Today is Monday, just about 1 p.m. What are the markets up to? Well, let's take a look at Swing Machine. On December 6th, the 5-minute goes short, which is today at 12 p.m. Now, it was flashing short as early as Friday afternoon on a 5-minute basis, but it has gone short, so the fear is melting away for right now. Again, Swing Machine at this level of interval is really measuring and showing us the here and the now if you like to trade on such a precise basis, which we like to do, surgical trading. Let's look at the ES futures contract. This is the S&P on a 5-minute interval at 8:10 this morning. Consistent with what we were saying on Thursday night, on Sunday night, look for the market to rally out. The market goes along at 8:10 at 45.52. One mini contract, you're up $2,275. The NASDAQ, the crazy aunt in the basement, but depending on what part of the country it's aunt. In Boston, it's auntie. Everything's got an R in it. The 5-minute interval, 10:15 this morning, today, long at 15,742.75, you're up 1,500. My guess is by the end of the day, that position could be up a few grand. It's been volatile. It is the NASDAQ, but I would not want to be shorting the NASDAQ now. The Dow, which we did say on Thursday night, the Dow and the Russell presented the best risk-reward relationship. That is, if you had to choose which of the four markets you wanted to get long, it would have been one of these two, preferably the Russell. But let's look at the Dow. 5-minute, 6:50 a.m. One contract, one mini, $2,500 and running. The Russell, 5-minute at 10:05 this morning. We were tweeting out about it. I think we sent an email out to everybody, I believe, when it was at about 2160 or so, thereabouts. And it continues to run. If one had got long at 2182, you're looking at close to $900 or $1,000. Gold on a 5-minute is still long. It's dipping, and that is from December 3rd. Oil. We also said oil was prime to bounce. At 11:15 today, at 68.25, $600. And nat gas is still short from the 6th, which is this morning. We also think nat gas is setting up probably the most promising trade for later in the week to bounce. Let's look at the dates and what is going on. This is classic market, rigging, call it what you will, manipulation. They love to take the markets down in front of a contract rollover, set the trap, get everybody bearish, and then as we go into contract roll, which means the December contract, futures contract, and options. This will either be a triple or a quadruple witching, but this December contract will be dead on the 17th, meaning anybody short, any novice short this contract has got to come out. And if they don't come out soon, they're going to come out at a much higher price. They may not want to buy the market, but they got no choice because it's going away. Now, for pros and for hedge funds, they understand how this game is played, and that's not a factor for us or for them. This is the official date. the reality of the situation is the contract, or let's put it this way, the next contract, which is March of 2022, is going to start trading more volume on the 9th and the 10th, most likely the 10th, than the December contract. So the unofficial roll will be in here. The official roll is here. The Fed is probably going to talk in here someplace. They usually do. So we're thinking these markets have put in, we believe, a near-term low through this contract roll period. It happens to coincide with Christmas. So CNBC and all the talking heads will be talking about a Santa Claus rally, yada yada. It's got nothing to do with Santa Claus. Has everything to do with market structure and what they do. Do we get another turn down before the end of the year? Possibly. Probably not likely. But we have to be on our toes and on our game. The VIX is trending down now, but it is very elevated. There is still very much fear, or let's put it this way, on a relative basis, more fear in this market than there was 2, 3, 4 weeks ago. So anything is possible. There still could be some sort of outlier event out there. We don't think it was COVID. We don't think it was the Omicron or whatever it is, the media, what was it, the moronic, that's what the media attached to the sell-off. It's anyone's guess, but there could be something else. We have international hotspots, Russia and Ukraine, China and Taiwan. Those are out there. They're not going away. And there's always the risk of there being something totally unforeseen, a black swan. But at the moment, as you can see, these markets now are running, and anybody who got short in what we call the hole, who got excited with the news of the day, Thursday or Friday, and went short, then now they are now trapped, and they are going to be cannon fodder. We will update later in the day. We went into our option contract, and what did we do? We didn't close the NASDAQ option. We sold a put, creating a vertical put spread on our very successful NASDAQ. And that is working out beautifully. We will update that, how we came to put that trade on, what tool we used, how we managed it, and where we are today as a teaching moment. Once again, I'm Bagging On at Stock Market Caddy. To all of our members, Merry Christmas. We're going to be in touch with you for sure. Everyone else, if you come by this video and you want to know more about who we are, by all means, visit stockmarketcaddy.com. Feel free to give us a shout. I'll answer the phone and speak with you. Happy to answer your questions. I can be reached at 813-758-8263. If you are on the fence, and if you are thinking about joining Stock Market Caddy anytime early next year, we are in the process of refacing our website, not for existing members. Anyone who is a member today, anyone who is a member by December 30th at whatever level will be insulated from a small price increase we're going to have across the board come January 1. So we're letting everyone know. Feel free to again, give us a shout. Have a great day, everybody, and enjoy the squeeze.